Welcome back to Talk Tickers, everyone. Today we're taking a deep dive into Applied Materials' latest earnings call, hot off the press from Q1 2025.
Yeah, this one's going to be interesting.
Now, just a quick reminder for anyone who might be new to the show, Applied Materials is basically the backbone of the semiconductor industry. They supply the tools and tech that make those tiny but super powerful chips that, well, pretty much run our world these days.
Absolutely. They're the picks and shovels of the digital age.
Exactly. So let's get right into it. Headlines are screaming about Applied Materials hitting record revenue, something like $7.2 billion. What's driving this incredible growth?
Well, it's not just that everyone's buying more phones and laptops, although that's definitely part of it. Their CEO, Gary Dickerson, made it very clear that the real game changer here is AI.
AI. It's everywhere you look these days. But what's Applied Materials' specific role in this AI revolution?
They're laser focused on a few key areas. For starters, they're developing the equipment to build the most advanced logic chips, which are basically the brains of all these AI systems.
Okay, so the brains. What about the memory?
They've got that covered too. High-performance DRAM, which is essentially the short-term memory and then even faster memory, specifically designed for AI applications called high-bandwidth memory.
Got it. Brains and memory. Anything else?
Oh, there's more. They're also big on advanced packaging, which is how they put all those tiny chip components together in the most efficient way possible. But here's the thing that really caught my eye. They're pioneering something called power electronics.
Power electronics. Okay, you're going to have to explain that one.
It's about making data centers more energy efficient. Think about it. Data centers are these giant power hogs with servers running 24/7. As AI gets more complex and more widely used, those data centers are going to need even more power. Applied Materials is ahead of the game, developing tech to make those data centers run more efficiently.
Wow. So they're not just focused on making AI chips more efficient, but also the entire infrastructure that supports them.
Exactly. It's a smart move, especially when you consider that AI is already a huge market and it's only going to get bigger. And as it gets bigger, energy efficiency is going to become even more critical.
That makes a lot of sense.
Yeah.
So they're setting themselves up to be major players in this AI-powered future.
You got it. They're not just along for the ride, they're actively shaping the future of this whole industry.
That's impressive.
Yeah.
But how does all this translate into actual profits for Applied Materials? How do they make money from all of this?
Well, Dickerson kept talking about inflection points. He's essentially betting big that the way we manufacture chips is about to change dramatically, and guess who's going to profit from those changes?
Let me guess. Applied Materials. They're the ones supplying the technology to make it all happen.
You got it. They're developing the cutting-edge tech needed to make those next-gen chips. Things like gate-all-around transistors, which are going to be way more powerful but use less energy. And then there's backside power delivery, which is a whole new way of delivering power to the chips.
So it's like they're not just selling picks and shovels during a gold rush. They're designing the next generation mining equipment.
Perfect analogy. And that means they're positioned to grab a bigger slice of the market as these new technologies become the standard. Dickerson even mentioned that these inflection points are significantly increasing their TAM, their total addressable market.
So by investing in these cutting-edge technologies, they're actually expanding the size of the pie that they can potentially get a slice of.
Yeah.
Pretty smart.
Absolutely. It's a strategy that seems to be paying off. They're already seeing great growth in their foundry logic business, which is directly tied to those advanced chips used in high-performance computing and AI.
It sounds like they're on a roll.
Mm-hmm.
But, every rose has its thorn. There have to be some challenges in the mix too, right? What are they up against?
You're right. It's not all smooth sailing. And the biggest challenge they're facing right now has to do with China.
Ah, yes. The elephant in the room. The ongoing trade war and those restrictions on selling certain tech to China. How big of a deal is this for Applied Materials?
It's definitely a headwind. China is a massive market for semiconductors, and these restrictions are impacting their ability to sell to certain customers there. In fact, their DRAM sales actually took a hit this quarter, and part of that is because of the trade restrictions.
So they're definitely feeling the pinch in the short term. What's a longer-term outlook? Can they overcome this challenge?
That's where things get really interesting. While those restrictions are a definite challenge, Applied Materials seems to be taking a strategic approach to navigating this whole situation. They're focusing on diversifying their customer base and finding growth in other parts of the world.
So it's a bump in the road, but they're adapting and finding ways to keep growing. That's the kind of resilience I like to see. But hey, enough about the serious stuff for now. Time for some fun.
You teased an outrageous trade idea earlier. You know I love those. You know me too well. Let's take a quick break, and when we come back, I'll lay out a speculative, totally not financial advice, trade idea based on what we've learned about applied materials and everything going on in the semiconductor industry. Stay tuned.
Welcome back to Talk Tickers.
So we were just talking about how Applied Materials is riding this AI wave, but did they actually back up their bold claims with, some solid numbers?
Right. We all know companies can spin a good story, but I'm more interested in the cold, hard data. What did the earnings call actually reveal?
Well, they definitely delivered on the revenue front. They pulled in a record $7.2 billion for the quarter.
Wow, that's a lot of billions.
Yeah, it's a 7% jump from the same period last year, so they definitely exceeded expectations there.
Okay, impressive top-line growth. But what about profitability? Are they managing costs effectively or just throwing money at all these new technologies?
Their profitability metrics actually look quite healthy. Their non-GAAP gross margin, which basically tells you how efficiently they're turning revenue into profit, expanded to 48.9%. That's a full percentage point higher than last year, so it seems like they're keeping costs in check and pricing their products strategically.
So not only are they growing revenue, but they're becoming more profitable as they do it. That's a winning combination in my book. But I'm curious, where exactly is all this growth coming from? Is it spread evenly across their different business segments, or are there any standout performers?
It's a bit of a mixed bag, as you might expect. Their semiconductor systems division, their biggest revenue generator, saw a 9% year-over-year increase. And a lot of that growth was driven by their foundry logic business, which, as we talked about earlier, is all about those super advanced chips used in AI and high-performance computing.
So that focus on AI is really translating into tangible results. It's not just a buzzword for them, it's a core part of their growth strategy.
Yeah.
But you mentioned a mixed bag. What areas were less impressive?
Well, as we touched upon before the break, their DRAM sales actually took a hit this quarter. It was a decline compared to the same period last year, and part of that is likely due to those trade restrictions on selling to certain customers in China.
Right, those trade restrictions are a real wild card in all of this. It sounds like they're mitigating the impact as best they can, but it's still a significant factor to watch. So even with the DRAM slowdown, the overall picture seems pretty positive. They're growing, they're profitable, and they're investing heavily in the future. But what about their plans going forward? Did they give any hints about what we can expect in the coming year?
They did give us some glimpses into their strategic roadmap. One of the most interesting things they emphasized was this concept of, and I quote, high-velocity co-innovation.
High-velocity co-innovation. Sounds like a mouthful. What does that even mean in plain English?
It's basically about fostering closer collaboration with their customers and partners throughout the entire development process. They're talking about sharing knowledge, resources, expertise, all to accelerate the pace of innovation and get new technologies to market faster.
So it's like a collaborative ecosystem where everyone benefits from the shared brain power and resources.
Exactly. They believe that this approach is going to be crucial for tackling those increasingly complex challenges of, actually developing these semiconductors. A great example they gave was their new EPIC Center in Silicon Valley, which is set to open in 2026. It's going to be this hub for this kind of collaborative innovation, bringing together engineers, researchers, and industry leaders from all over the world.
It sounds like a melting pot of cutting-edge ideas and expertise. I'm already excited to see what kind of breakthroughs might come out of that. But looking beyond these long-term initiatives, did they give any concrete guidance for, the next quarter or two? The stuff that investors are really hungry for?
Oh, yeah, they did. For Q2 of fiscal year 2025, they're projecting total revenue of about $7.1 billion.
So pretty much in line with this quarter's performance.
Yeah, it would be another 7% year-over-year increase. They also anticipate non-GAAP earnings per share of around $2.30. That's a solid 10% jump from the same period last year.
Okay, so they're expecting continued growth, even with those ongoing trade war challenges. That should be reassuring for investors who might be a bit nervous about, the future. But we all know projections are just projections. What are some of the key factors that could cause them to miss those targets, or maybe even exceed them?
That's a great question. There are always a lot of variables that can impact a company's performance, especially in a dynamic industry like semiconductors. As we already talked about, the situation with China is a major wildcard.
Definitely. Those trade restrictions could ease up or they could escalate, and either scenario would have a big impact on Applied Materials prospects. What else should we be watching closely?
Another key factor is the overall health of the global economy. If there's a slowdown in growth or even worse, a recession, That would probably dampen demand for semiconductors and could put a dent in Applied Materials results.
Right. Their fate is tied to the broader economic winds, so it's important to keep an eye on those macroeconomic trends for sure.
Yeah.
Anything else on your radar that could impact their performance?
Well, we can't forget about the competition. The semiconductor industry is notoriously fierce, with companies constantly fighting for market share and that, technological edge.
It's a high-stakes game with billions of dollars and global dominance on the line.
Exactly. And Applied Materials faces some stiff competition from other big players like ASML, Tokyo Electron, and Lam Research. Each of these companies has their own strengths and areas of focus, so it's a constant race to stay ahead.
So how does Applied Materials differentiate itself in this crowded field? What are their key advantages?
One of their biggest strengths is their broad and diverse portfolio. They offer a wide range of equipment and services, covering a lot of different steps in the chip-making process. This makes them kind of a one-stop shop for chip makers, which is a big selling point.
Like they're providing all the tools and ingredients a chip maker needs to bake their technological cake, so to speak.
That's a great analogy. And this breadth of offerings also gives them some resilience. Even if one segment of the market slows down, they have other areas they can rely on.
So diversification is key in this ever-changing industry. But it's not just about having a wide range of products, right? They also need to be at the cutting edge of innovation. How do they stack up in that regard?
Their commitment to innovation is pretty clear. Their focus on those inflection points we talked about, like gate-all-around transistors and backside power delivery, shows that they're willing to push the boundaries of what's possible. They're constantly pouring money into research and development to create the next generation of chip-making technologies.
So it's a balancing act. They need to be a jack of all trades, but also a master of some.
It sounds like they're navigating that balance pretty well.
They are. They're consistently outperforming the market and gaining share in those key areas, which suggests their strategy is working.
Well, color me impressed. They're really painting a compelling picture of a company that's not just riding the current wave, but actively shaping the future of the industry. But now, for the moment, we've all been waiting for.
It's time for some speculation.
Let's shift gears and dive into that outrageous trade idea you teased earlier, the one where we throw all caution to the wind and embrace pure speculation.
Okay, buckle up. Remember, this is purely hypothetical, not financial advice, and definitely not for the faint of heart.
Consider us warned. Hit us with your wildest idea.
Okay, so remember how we were talking about those trade restrictions creating headwinds for Applied Materials in China? Well, in the market, sometimes a constraint for one company creates an opportunity for another.
What if, instead of focusing on Applied Materials, which is facing all those limitations, we look at the companies that could actually benefit from those limitations, specifically Chinese domestic chip makers?
I see where you're going with this. It's a contrarian play, betting on the companies that aren't being held back by the trade war.
Precisely. These companies aren't subject to those same restrictions and could potentially step in to fill that void left by Applied Materials.
So the idea is to find those Chinese companies that are well positioned to capitalize on this situation. Companies with the technology, the capacity, and the drive to become major players globally.
Exactly. Now, I got to emphasize again, this is purely speculative. We're talking emerging markets, complex geopolitics, and a whole lot of unknowns.
But that's what makes it exciting, right? Remember, folks, this is pure speculation for entertainment purposes only. If you're even thinking about doing this, please do your own thorough research. Understand the risks, the companies, the dynamics at play.
Couldn't agree more. This is all about exploring possibilities, not making reckless bets.
Well, I think we've given our listeners plenty to think about today.
We've covered a lot, from Applied Materials' amazing performance and their big plans to the challenges they face, and even some of the speculative opportunities that those challenges might create.
And with that, we'll wrap up our deep dive into Applied Materials. Thanks for joining us on Talk Tickers, where we help you navigate the financial world and maybe even spark some outside-the-box thinking.
Until next time, stay curious and keep exploring.
Welcome back to Talk Tickers. We spent the last two segments really digging into Applied Materials' earnings call, all about their record revenue, those big bets on AI, and, of course, those pesky trade restrictions. But now it's time for the part everyone's been waiting for, right?
Yeah, it's time for our This Is Not Financial Advice segment. Time to throw caution to the wind and just explore some wild, speculative trade ideas.
Exactly. And remember, folks, this is purely for entertainment purposes only. We are not financial advisors.
Definitely not.
Don't blame us if you make any rash decisions based on our crazy speculation.
Right. So just to recap, we talked about how those trade restrictions are, well, they're creating some headwinds for Applied Materials in China, right?
Definitely. It's limiting their ability to sell to certain customers there, and that's creating a sort of vacuum in the market.
Exactly. And whenever there's a vacuum, something's going to rush in to fill it.
Makes sense. So what are you thinking?
Well, here's the speculative angle. What if instead of focusing on Applied Materials, the company facing all those limitations, we look at the companies that could actually benefit from those limitations?
I like where you're going with this.
Specifically, I'm talking about Chinese domestic chip makers.
Ah, okay. It's like a contrarian play, betting on the companies that aren't being held back by this trade war.
Exactly. They're not subject to those same restrictions, and they could potentially step up and seize this opportunity to gain some serious market share within China. As Applied Materials has to scale back their operations there, it leaves a gap for these domestic players to come in and meet that demand.
So the idea here is to try and find those Chinese chip makers that are, well positioned to take advantage of this shift in the competitive landscape.
Right.
Companies that have the tech, the capacity, and the ambition to really become major players, maybe even globally.
Exactly. Now, I just want to really emphasize this one more time. This is purely speculative.
Oh, yeah.
We're not talking about guaranteed winners here. Investing in emerging markets always carries a higher degree of risk, and there are just so many unknowns when it comes to, how this trade war is going to play out long term.
Right. This isn't about just blindly throwing money at any Chinese chip maker you can find. It's about doing your own research, due diligence, looking into the companies, their financials, really trying to understand their potential for growth.
Exactly. This is where you, the listener, have to do your own deep dive. We're just giving you a starting point, an idea to consider.
It's like we're handing you a treasure map, but you still got to go out there and dig for the gold yourself.
Exactly. And who knows, maybe you'll strike it rich. Or maybe you'll just learn a lot along the way, which is valuable in itself.
True. It's all part of the adventure of investing, right?
Right.
Well, I think we've given our listeners a lot to think about today.
We have. We covered a lot of ground, from record earnings to wild trade ideas.
Absolutely. Thanks for joining us on Talk Tickers. We'll be back next week with another deep dive into the world of earnings calls and all the latest market-moving news.
Until then, stay curious, stay informed, and as always, happy investing.